Welcome back to Eye on the Money, and today on the show we're talking about investing in the stock market. And with me in studio I have Rufus Kamau, who's a research and market analyst at Scope Markets Kenya. Now Rufus, before we took a break, you are really breaking for us down the fundamentals. You're explaining to us what it means to invest in the stock market, bare minimum you need to invest in the stock market, what sort of benefits you'll reap from it. In fact, you even talked to us about the best time to buy. And you said there's a saying that goes, you should buy when there's blood on the streets, or something along those lines. So going by that, what about someone who's willing to sell? When I get to a point, I mean, I've been trading for a while, maybe I need now to cash out and get my money, or maybe I foresee something it's going to tank. I don't know if that's the right lingo. So what would you advise to someone who's trading but now wants to sell? What should inform that decision?
So when you're trading in the stock market, you're literally purchasing investment vehicles, and different investment vehicles move at different speeds. So whenever you buy into a certain stock, let's say you have a company XXX, and the company is, let's say, giving you 20-30% returns per annum, then when you are looking to sell that share, there's that opportunity cost. So if I sell here, where do I put my money? So would you rather keep your money in the bank rather than keep it in form of a stock that is growing over time? So you always need to think about that. So if you're looking to sell a stock, you have probably found a better stock that is performing really well. And in that case, you change from a slower moving investment vehicle to a faster moving investment vehicle. So that's the main reason that people sell a stock. The other reason is what you call an investment goal. So when you are starting to build your portfolio, let's say you want to buy your very first share today, you basically have an investment goal. You don't want to be investing there forever. At some point, you need to reach a certain goal, and that goal could be different for different persons. So a person might be, let's say, building an investment portfolio for retirement benefits. So remember, you can save for retirement by building a portfolio of stocks, such that if you reach a certain amount, then the stocks will be giving you a dividend of, let's say, 100,000 Kenya shillings every month. Can be 200, varies from person to person. Okay. Another person might have an investment goal of building a home. So if you keep on building your portfolio, it reaches a certain amount, then you might decide to sell everything, buy land, build yourself a home. So it varies from person to person. So if you ever reach your investment goal, then you can definitely sell your shares and then implement your goal. At the same time, if you are really just looking to cash out your profits, then make sure wherever you're putting that money has a better growth than the stock that you're selling. Yeah.
Now, Rufus, from someone who's sitting across from you, it sounds like a lot actually goes into this, from understanding how the markets work, from watching the various counters, from just knowing which company stock you want to buy. So my question is, for a layman, is it possible to go at it alone, or is it always necessary to enlist the help of a professional? How do the rules work? And just in case I want to go at it alone, what would that require then?
So if you're looking to invest in the stock markets right now, let's say you've never invested before, your best bet is to look at people who are already invested and see what they are doing. This way you can avoid some common traps, common mistakes that are done by beginner traders. So you basically look at really good traders globally and also locally. You look at people like Warren Buffett, look at their story, how they select their stocks. All this information is public and it's available for free. So if you look at people like very famous investors such as Cathie Wood, she's a recent outperformer in the market. She's doing really well, and her research is usually very public. So when you look at investors who are invested right now and how they are selecting their stocks, then you can borrow those concepts and then implement them in your own strategy. So it's very important that you also follow local traders, including myself. I do a lot of posts. I do a lot of newspaper articles. I post a lot on Twitter. I do webinars, real live webinars, basically researching the markets, showing people how you go about it. And once you learn from me and other traders, then you can have that benefit of trading from an informed perspective. So at the same time, there's other brokers, other investment advisors out there that will charge you a fee for it. So it will really depend on your situation, whether you want to find a person who is charging you, subscribe to their program, or just research yourself online. Yeah.
And I'm so glad you've mentioned that, because we've seen a situation where some people have gone into the market and maybe they've approached the wrong person who's passed themselves off as a stockbroker or someone who's experienced in this field, only for them to later find out they're dealing with a quack and they've lost so much money later down the line. So in line with this, I would like to ask about the policies and regulations around, you know, just regulating stockbroking. First of all, what do they look like? Would you say they are favorable, or do they need some amendments? What would you say on the front of policies and regulation?
So when it comes to policies and regulations, there is the CMA, the Capital Markets Authority of Kenya, that regulates the brokers, the investment advisors, the fund managers, and the entire ecosystem of investing in Kenya. So for all licensed brokers, fund managers, they are all listed on the CMA website. So if you go to the CMA website, you're going to see a list of all the licensed persons. In that case, it will be easy to confirm that this person that is giving you this or that advice, whether they are licensed and regulated by the CMA. So at the same time, when it comes to getting investment advice, sometimes you don't have to go through the professional. There are online communities right now, and they are really changing everything that is happening in the entire scenario. So if you look at online communities on Reddit, we have online communities on Telegram. You basically meet people like you and me who are in the same investment journey. So this way they can tell you that this is what is happening. You can ask the questions, you get responses, and this way you can basically travel in the same journey with other people who are doing the same thing. So if you're looking to start investing right now, I would advise that you join a trading community or an investing community, see their challenges, ask them questions. This way they are very open, they will share what they have gone through. In terms of market analysis, there are people who are really talented, people who do a lot of research in the markets, and they usually share this for free. So you'll see people sharing their different perspectives, their thoughts, their analysis about a certain stock. And once you do your own due diligence, then you can decide that this is the right stock for me, and then you invest in that.
Finally, Rufus, before I let you go, you know, these days it's almost impossible to talk about doing business without talking about the realities that have been occasioned by the COVID-19 pandemic. And well, last year, now going into this year, things have stabilized a bit, but we saw a situation where almost every business was affected. In fact, even the stock market was not spared. My question is, how has COVID affected, you know, the way people are trading on the stock market, and what does the future even look like, particularly in the country, you know, in Kenya?
Okay, COVID-19 pandemic has had its bad side and also its good side. So let's start with the good side. So since the pandemic began, we saw a lot of lockdowns where people are forced to stay at home. And this period when people stayed at home, they had to rethink their investment ideas, their businesses, and so on. So during this period, this is when we have seen the largest rise in the number of traders in the stock markets. So people started thinking of investing. If you are running a business, it was very difficult to do a physical business during the pandemic. So in this case, people started exploring other investment avenues. So some people decided to put their money in stocks, and since then we have seen some really good growth. So if you look at the records in the Nairobi Stock Exchange, you look at Safaricom, the banking sector, the manufacturing, they have all been really doing good. So at the same time, if you look at international stocks, similar events have been happening. They have been really getting some good performance. So through the pandemic, people are able to sit back, look at their business structures, business strategies, and decide to invest in stocks. On the bad side, we saw a lot of companies crashing, mainly due to fear. So a lot of people are very afraid. We didn't know how long the COVID-19 pandemic would last. We did not know whether we would get a vaccine. So to isolate or to protect themselves from that risk, people would sell their shares and then buy much more safer assets such as government bonds. So during that period, the stock prices really went down because of the high supply. But after things settled down, we found a vaccine, there was a renewed confidence in the markets, and people started reinvesting. So when people are reinvesting, the stocks were really low, so they were able to buy at a discount. And if you look at every investor right now, Not every, but most of the investors who entered late after we found the vaccine have really found some good benefits from the stock market.
Oh, wow.
Yeah.
Thank you so much, Rufus, first of all, for making time, but also for just talking to us about this complex topic of investing in the stock market. Personally, from where I'm seated, I now have so much more information, and in fact, maybe we'll have a conversation after here on whether I should start or not.
To be honest,
Yes.
It's really simple. Like, you can start investing from the comfort of your phone. You can get real-time information about companies, their financials, their updates, new products from their websites, right from your phone. Then you select the stock, click buy, and you have the stock. So it's very simple.
Well, you've heard it from the experts. It's very simple. Unfortunately, that's all the time I had for you today on Eye on the Money. But before I let you go, I'm going to leave you with a financial tip. Cut the losses early. When shares start going the wrong way, take the pain and rip it off in one motion like a band-aid. Of course, every investment will wobble a tiny bit in value, but if the stock falls through your predetermined loss limit, it's possibly time to take the hit and move on. Often the shares will just keep sinking, mainly making the early exiters look pretty smart. This also opens up the opportunity to buy back in at much lower levels in the near future. Well, that's all the time we had for you today. Thank you for watching. And remember, we're introducing a subscription button for Eye on the Money, as well as so many other shows right here on Metropole TV. In fact, very, very soon, I'm hoping by next week, I'll be sharing a USSD code for you to, just follow, and then you'll have a much more extended version and more information on Eye on the Money, as well as other shows. But in the meantime, remember, you can follow the conversation on our social media handles at Metropole TV KE on Facebook, Instagram, and Twitter. Enjoy the rest of your viewing.